Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about what's going on with the Russian ruble. Now, as we've discussed many times before, the strength of a currency is usually directly linked to the strength of an economy. So if your economy is doing well, if it's booming, if a lot of your companies are exporting lots of products, then other countries all around the world will want to buy those products, and usually they'll buy them in your currency, and so demand for your currency goes up, and therefore the value of your currency goes up. And in addition to that, investors from overseas also want to put money into your country, and as that money flows in, there is more demand for your currency, and so the currency value increases. So that's broadly speaking what happens when things are going well. But if things aren't going well, if your economy is struggling and your companies are struggling to be able to make things that anybody wants to buy, then demand for your currency will fall, and equally, investors might not want to invest into your country if it's not doing very well, and therefore demand falls, and therefore the value of your currency goes down. And over the course of the last 2.5 years, we have seen a major fall in the value of the Russian ruble. And I've talked about this in plenty of other videos. But in today's video, I want to talk about what's going on with regards to the exchange rate against the Chinese Yuan. Because Russia is gradually moving to using the yuan on a more regular basis. And in fact, following the sanctions that were imposed against the Moscow exchange in June 2024, it's now been reported that 99.6% of all currency being traded in Russia is Chinese yuan. And in addition to that huge movement in trading volumes, other countries such as India are now paying for goods being sold by Russia in Chinese yuan because nobody wants to deal in the ruble. And this represents a major problem from Russia's point of view, because if you move to a situation where companies and people in your country are using somebody else's currency, you lose control of your economy. It's very difficult then to keep a lid on inflation, because moving interest rates doesn't have the same impact as it does when everybody's using your currency. And we've seen this in countries such as Argentina and Turkey, where there's a high level of dollarization. It becomes very difficult for the central bank to be able to rein in inflation. So Russia is now struggling, and in today's video, we'll have a look at exactly what's going on with regards to the level of yuanization. We'll talk about what's going on with regards to liquidity, because Russia only has a certain amount of Chinese yuan, and it's now running short. And what that means is that companies in Russia that are importing things from China are now having to borrow Chinese yuan from the Russian central bank. And those borrowing rates are going through the roof and causing a major liquidity crisis. And this is putting additional pressure onto all of those companies. We'll also have a look at what's going on with the exchange rate with the US dollar. And then finally today, I'll wrap up with my summary. So what I think the implications of the falling value of the ruble are for the Russian economy, and what's likely to happen over the course of the next 3 to 6 months. But before we get started on all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. If you're a long-term supporter, either through Patreon, where you can get early access to my videos and watch them advert-free, or YouTube membership, where you'll also get early access, or buy me a coffee membership, thank you so much for that long-term support. Really does help to keep me motivated. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you for the time and effort and generosity involved in that. Unfortunately, I don't have the time to respond to every single one of those messages, but I do see them, I do read them, and I really appreciate it. One of the biggest implications of Russia's invasion of Ukraine has been the change in its trading mix in terms of the countries that it's dealing with. And China is now the single biggest partner in terms of both Russia's exports. Around 1/3 of all of its oil and gas and other commodities are sold directly to China, and also its imports. Russia has increased the amount it's importing from China from around 25% before the war started to over 40% today. So that means that 4 out of every $10 that Russia is spending are going directly to China. Now, immediately following the invasion, President Putin came out and told all countries that were dealing with Russia that they had to pay for all of their purchases in rubles. And his intention at that time was to make the ruble on a par with the dollar, to be a currency that every country in the world wanted to use. However, over the past 2.5 years, that strategy has completely failed. And in fact, the countries that are still dealing with Russia have refused to deal in rubles. The two biggest partners, China and India, both said that they would only deal with their own currency. Now, from India's point of view, Russia said that they weren't prepared to deal in Indian rupees because no other country in the world wants to be paid in rupees, and therefore Russia didn't want to build up a huge supply of rupees from selling all of the oil into India. And so they've been doing deals in both Chinese Yuan and United Arab Emirates dirhams. So basically, India have refused to deal in rubles, which has been a big blow to Russia. But the biggest blow of all has been China's dead-fast refusal to deal in rubles. They have said, we will only deal in Chinese yuan. And what we've seen over the past 2.5 years is a gradual Yuanization of the Russian economy. Companies in Russia that are buying lots of goods directly in from China, the 40% of all of its imports, need to find large quantities of yuan. And unfortunately, the companies that are selling directly to China, all of the oil and gas companies, are not the same businesses that are importing products. So we've got a situation here whereby certain companies are building up large quantities of yuan, whilst other companies are in desperate need of yuan. And what we've seen over the last 12 months or so is a huge increase in the demand for borrowing in Chinese yuan, because the Russian companies that are selling into China, who are receiving all of their income in yuan, now want to match their debt. They want to make sure that their borrowings are in the same currency so that they can pay interest and basically not have to convert back into Russian rubles. So this is why Russia is now becoming a yuan economy, because its biggest companies are dealing in yuan on a daily basis. And this is now putting a huge amount of pressure onto the Russian economy. And specifically, we are now seeing a shortage of yuan. There is a liquidity crisis that's building in Russia. But before we get into talking about the details of that, let's have a look at what's been happening with the exchange rate between the Russian ruble and the Chinese yuan. This chart shows the movement in the exchange rate between the Chinese yuan and the Russian ruble over the past 5 years. And what this shows is that 5 years ago, one Chinese yuan was trading for 9 Russian rubles. Today, it's trading for more than 13, which represents a deterioration in the value of the ruble of 45%. And in terms of determining the direct impact of Russia's invasion of Ukraine, if we look at the exchange rate in 2021, which was the year before the invasion started, you can see that on average, one Chinese yuan was trading for around 11.2 rubles. As soon as Russia invaded Ukraine, the value of the ruble collapsed, and at that point, one Chinese yuan was trading for 20 Russian rubles. However, between March and June 2022, the Russian central bank embarked on a period of buying the ruble to drive up the price. And by the end of June, one Chinese yuan was trading for 7.5 rubles, which was actually the strongest level it had traded at any time on this chart. Over the course of the following 12 months, the Russian central bank reduced the amount that it was purchasing in the international markets, and by October 2023, one Chinese yuan was trading for 14 Russian rubles. Now, at that point, President Putin instructed the Russian central bank to step in and do something about the value of the ruble. So once again, they embarked on more purchases in the markets. And in addition to that, the Russian government also introduced laws forcing Russian companies and individuals to convert foreign currency into rubles. So basically creating demand for the ruble to bring up the price. If we now zoom in and have a look at what's been happening over the past 12 months, you can see that that policy continued to drive up the value of the ruble till June 2024, when one Chinese yuan was trading for 11.4 Russian rubles. However, two important things happened in June. Firstly, the Moscow exchange was sanctioned, so that it was no longer able to trade in dollars or euros. So this put additional pressure onto the yuan. More companies needed to get the yuan to be able to make international purchases. And secondly, Chinese banks and financial institutions were hit with a warning from the USA that if they were found to be dealing with Russian counterparts that were on the sanctioned list, then those institutions would also face the same sanctions. And what this threat of secondary sanctions did was restrict the amount of yuan that Russia was able to access, and also restricted the payments that were being made directly from China. And over the course of the past 2 months, we have seen a sharp deterioration in the value of the ruble. And one Chinese yuan is now trading for more than 13 Russian rubles. And we're also seeing a liquidity crisis. As regular viewers will know, I hate jargon. I absolutely hate it. If I'm watching a video and somebody uses a term or a phrase that I don't understand and they don't take the time to explain what it means. So before I go on to talk about the liquidity crisis in Russia, I wanted to talk about what liquidity is, just a quick explanation. So basically, the difference between being rich and being liquid is having available funds. So if we talk about this in the context of Russia, Russia has a lot of resources. We know that they've got some of the biggest oil reserves, gas reserves, they've got lots of gold, they've got lots of commodity. So that basically means that Russia on paper is very rich. It's got a lot of natural resources. But in order to actually have actual funds, to have the money to be able to pay for things, you need to convert those resources into cash. And cash is basically the liquid asset when we're talking about finance. So a liquidity crisis, a lack of liquidity, basically means you're running out of cash. And in the context of dealing with China, what we're talking about is Chinese Yuan, because the companies that are importing 40% of all of Russia's imports, all of those Russian businesses that are doing orders and business with Chinese counterparts need to have Chinese Yuan to be able to make all of those payments. If they don't have Yuan, then they can't make the payments, and therefore the Chinese suppliers won't send the goods. Now you might be thinking, well, can't they just get it from the bank? Well, that's the problem here, that the Russian central bank, the majority of its funds are in Russian rubles. That's the currency of Russia. That's what it works in. So it now has lots of foreign currency pots. So it will have US dollars and euros and Chinese yuan. And if companies need to get that yuan, they can go to the bank and say, can you give me a loan in yuan? Or they can swap rubles for yuan. But if you're a business in Russia, you may not actually have enough rubles to be able to exchange them for yuan to make the purchase. You need to get all of those goods in to then sell them to all of the Russian consumers. You then get the rubles and you can pay back the loan. So a lot of businesses in Russia are actually borrowing the money from the bank, and they need that currency to be provided in yuan. It's no good those businesses being given a lot of rubles because they can't make the payments to the Chinese counterparts in rubles. They need to get yuan. So there is a huge increase in demand for Chinese yuan at the moment in Russia, and the Russian central bank simply doesn't have enough yuan to be able to satisfy all of the demand. And this is now causing a liquidity crisis. So it's one thing placing the orders with the Chinese businesses for all of these goods, but if you can't make the payment, if you don't have any liquidity, you can't actually send the funds, then you're not going to get that business. You're not going to receive all of those goods. And this is now causing a major problem in Russia. The demand from Russian companies to take loans in Chinese yuan has risen significantly during the course of 2024. And this chart shows the movement in the Bank of Russia's yuan swaps during 2024. And the scale on the right-hand side of this chart is shown in Chinese yuan and goes from 0 at the bottom to 40 billion yuan at the top. And what this chart shows is that in the first 4 months of 2024, the demand for Chinese yuan was relatively limited, less than 10 billion yuan. However, from June onwards, there has been a sharp increase, and this coincides with the introduction of the increased restrictions that were introduced by the USA. And if we look specifically at what's happened in August and September, you can see that there's been a dramatic increase in both the amount of loans. You can see that there is a lot more green on that side of the chart than all of the rest of the chart combined. So there has been a lot of demand for Chinese yuan borrowing, but there's also been a huge increase in the amount of that borrowing. It rose above 20 billion yuan for the first time ever in August, and in September it's risen to more than 35 billion yuan. And as a direct result of that increase in the demand for borrowing and the shortage of Chinese yuan in Russia, there's been a sharp increase in the cost of the borrowing. This chart shows the movements in the cost of borrowing in Chinese yuan in Russia over the course of the past 6 months. The blue line on this chart shows the central bank's yuan swap rate, so basically the cost of borrowing in yuan. So when Russian companies organise a loan in Chinese yuan in Russia, the loan will be denominated firstly in rubles and then will be swapped into Chinese yuan. So that's the cost of actually borrowing in yuan. And if we look at what's happened to that cost, back in March 24, the cost of swapping into yuan was around 4%. However, over the course of the past 5 months, that cost has doubled to 8%. And if we now look at what the actual borrowing cost of that yuan will be, which is shown by the white line, back in March, the borrowing cost was running at around 7%. Now, interestingly, between March and June, when there wasn't as much demand for Chinese yuan, the rate fluctuated and at certain times got down to around 2%. However, following the introduction of the increased restrictions by the USA in June, we saw a huge spike in the borrowing cost, and it rose to around 28%. Now, that did come back down to a new level, sitting at around 7 or 8%. But in August, we've seen another spike in the borrowing cost to above 20%. And we don't have the figures for September, but it's likely, given the data that we've just seen with regards to the swaps that are being put in place by this Russian central bank, that the rate has now risen to above 30%. So that would mean that if you're a company in Russia right now and you're wanting to borrow Chinese yuan to pay for all of the goods that you're importing, you would have to pay firstly a swap charge of around 8% on that money, and then on top of that, interest of around 30%. So we're talking about a cost of somewhere in the region of 35 to 40%. That is hugely expensive because most companies that are importing goods and then selling them on to consumers are not making that sort of profit. You would need to be making 50% margin or more on those goods to be able to cover those costs. And this is another reason why we're seeing an increase in inflation in Russia right now, because companies that are importing from China are going to have to pass on all of these costs when they're pricing their goods. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 5 years. And the reason I wanted to show this is that Russia is still doing some trade in dollars. It's still being paid by certain countries in dollars for oil and gas that it's exporting. And also, it's important to see what's happening in terms of the international value of the ruble. What this chart shows is that 5 years ago, one US dollar was trading for around 65 Russian rubles. In the 12 months prior to the invasion of Ukraine, one US dollar was trading for around 75 rubles. Immediately following the invasion, the exchange rate collapsed and $1 was trading for more than 125 rubles. As we talked about with regards to what happened with the Chinese Yuan exchange rate, the Russian central bank then stepped in and started buying in the international market to bring the value of the ruble back up. And in June 2022, one US dollar was actually trading for 50 Russian rubles, which was the strongest level that had been seen for around 10 years. However, over the course of the following 12 months, the Russian central bank stepped back from those purchases, and the value of the ruble against the dollar fell to less than 100. That proved to be too much for President Putin. He instructed the Russian central bank to do something about it. They stepped into the market and started buying again and got the value back down to around 88 to one US dollar. However, if we zoom in and have a look at what's been happening over the past 6 months, you can see that the value of the ruble has deteriorated significantly in August and September and is now trading above 92 to one US dollar, which is actually the lowest level that it's traded at since April 2024. And this really shows that there's a lot of pressure on the Russian economy right now. So what's the summary and conclusion today? Well, I wanted to post this video because, as I said right at the start, the value of a currency, generally speaking, is linked to the strength of an economy. If an economy is doing well, if it's booming, then usually you would expect that currency to also be in strong demand and to be performing very well. And the opposite also applies. If your economy isn't performing well, then it's likely that your currency will be rapidly falling in value. And what we've seen in today's video is that over the course of the past 2.5 years, the value of the ruble has fallen significantly. When you look at where the ruble was trading on average in 2021, we're looking at a huge fall in the purchasing power of the ruble. And that's one of the reasons why inflation is so high in Russia right now, because all of the things that it's having to buy in, which are then priced in Russian rubles on the shelves in Russia, are becoming more expensive because the value of the ruble's falling and therefore those goods are going up in price. And this is a further factor that's a major problem for Russia because they're trying to bring inflation back down. The Russian central bank has increased interest rates on 7 separate occasions in the last 14 months to the current level of 19% to try to get inflation back under control. But the problem is, as the value of the ruble continues to fall, it means all those goods are going up in price anyway, irrespective of what the Russian central bank is doing with interest rates. There is no link now between the interest rates and what's happening with inflation. Now, in normal circumstances, if you increased your interest rates to 19%, that would make it very attractive for overseas investors. If you were able to put cash into Russian bank accounts right now, you could earn an interest rate of 19%. That is an incredibly good return. If you look at stock market returns over the last 12 months, you would beat it by just putting money in the bank in Russia. But overseas investors aren't doing that in Russia because of the political issues. Firstly, the West isn't able to do it because all the sanctions are in place. But secondly, a lot of investors are nervous about putting money into Russia. Firstly, because there's the political environment. And secondly, if the value of the ruble deteriorates, then even though you're getting 19% interest added to your capital, the value in total could actually go down if the exchange rate goes heavily against you. And that's what we've seen in countries like Argentina and Turkey. Despite the fact that they've had really high interest rates, the value of their currency has fallen significantly. And what we talked about in today's video is what's been happening over the course of the last 2 years with regards to the exchange rate between the Russian ruble and the Chinese yuan, which is now absolutely critical to the success of the Russian economy. China is now its biggest single market in terms of exports, and it's also its biggest single market in terms of imports. So Russia is now linked to what's happening in China, and so the value of the currency against the Chinese yuan is really important. And what we've seen from the data is that over the course of the past 2 years, there's been a significant fall in the value of the ruble against the yuan. And that's putting further pressure onto the Russian economy because, as we've just discussed, imports are getting more expensive. And also, from Russia's point of view, as they're selling more of their exports to China, they're building up all of these huge amounts of Chinese yuan. And the problem that that's posing for those Russian companies is that not a lot of other countries around the world want to be paid in yuan. So you've got a currency which you're then having to convert into other currencies to make payments. So this is becoming a real headache from Russia's point of view. And what we've seen in terms of the amount of yuan that's in Russia is that there's currently a shortage. There is a liquidity crisis. All of the companies that are importing things need to borrow in yuan. They need that cash to be able to make the payments into China. There simply isn't enough in Russia right now, and so there's been a huge increase in swaps. The Russian banks are having to turn to the central bank and say, please give us lots of yuan. So the Russian central bank is doing that. But as the liquidity crisis increases, we've seen shortages of yuan, and so the cost of both swapping into yuan and also borrowing in yuan has gone up significantly. That's applying more pressure to all of those Russian businesses. As costs go up, their profits go down. That's what's happening right now. And it's also forcing up prices on the shelves because those businesses are having to increase their sales prices to cover their increased costs. So the overall summary of today's video is that despite the fact that Russia has pivoted and become a major trading partner with China, that is now causing major problems for Russia because they simply don't have enough currency to be able to do all of the deals. China has refused to deal in rubles, so the value of the ruble has fallen because there's very little demand for it. And at the same time, there are now shortages of yuan in Russia, which are driving up costs for all of their businesses, which are reducing profits and putting even more pressure on all of those companies and the Russian economy. And if we look at what's likely to happen over the course of the next 3 to 6 months, it's likely to get worse because the USA is closing in on this. It's warned all of the Chinese banks and financial institutions that if they're found to be dealing with Russian counterparts who are on the sanction list, then those institutions will also face sanctions. That means that they're now more cautious about making those payments. They're restricting the flow of cash. That's making things worse from Russia's point of view. And it's likely over the next 3 to 6 months that we will see this liquidity crisis getting worse, applying more pressure on the Russian economy, and Russian businesses will see their margins contracting further and may even move into a loss-making situation. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.